Okay, happy new year, everyone. Welcome back to the show, Fairways and Finance. Jeff Smith, excited to be here with you. And this is our second day in 2023. So, really looking forward to the new year. A lot of great opportunities ahead this year. 2022 was the toughest year in the mortgage business that I've been in. I've been in the business for over 17 years. And a lot of people I know who've been in the business for 30 years say that it was the toughest year they ever had in the industry as well. So rising rates, home prices that have risen significantly, and the pace at which the rates rose in 2022 made it a really challenging year. And so a lot of buyers put home purchase on hold. They were concerned about prices, concerned about rates, and that made it really difficult to do purchase loans. And then with rates rising, no one was refinancing either. So we kind of had a two-headed monster of a really difficult year. But it's important to remember a couple things, really. One, the real estate market is cyclical. So we always go through these ups and downs, and in 2020 and 2021, as rates came down, those were two of the best years in the last 30 years in the mortgage business. So not surprising that we then follow that up with one of the worst years in the mortgage business. But knowing that we're always going to go through ups and downs helps to navigate that situation. And there's still business that can be done when the market is down. I still did business last year, still made a great living last year, not anywhere near what I made in 2020 or 2021, but by all accounts, still made a great living. And so as long as you keep working on your business, you keep prospecting, you keep generating leads, even in a down market, you can do well. The other thing that was really different for Danielle and I this time around was we had money in the bank after the good years in 2020 and 2021. And so we made sure to save a lot of money during those years when volume was up. And then this last year, we spent a lot of this year pulling money from our savings. Almost every month we were pulling from our savings. But that allowed us to continue living our lifestyle, not accumulate a bunch of debt, and not be super stressed out looking for another job and panicking because we had money in the bank. And so we could weather the storm. But if you're spending everything that you earn during the good years, when you hit a bad year, then you go into full panic mode because you don't have any money to fall back on and you're not doing any loans. And then when you're panicked, you make bad decisions. So saving money when times are good is super important. And at some point here, whether it's this year, next year, a couple years later, whatever, sometime in the next 5 years, we're going to go through another really good year again. And hopefully we'll have multiple good years over the next 5 years. So during those times, remember to save money. You should be saving a minimum of 20% of what you're bringing in. But in the good years, you should really be trying to save 50, 60% of what you bring in as cash in the bank or stocks in your brokerage account. One of the two. It needs to be liquid money, not retirement. You should still be putting money into retirement as well. But I'm talking about liquid money that you could pull without any penalties or fees when business slows down. So just know that and be prepared for that and expect it, because it will continue to happen every few years. We go through these cycles. But what I want to talk about today is my move to open a mortgage brokerage. So last year, was a year for me where I really thought hard about my business and what I want to do, what I'm about going forward. And being a mortgage broker is something I've looked at over the last 5, 6 years, and when we've gone through a couple of these cycles where rates have risen, what ends up happening is we go through margin compression in the mortgage industry. And so margin compression is a fancy way to say that lenders start cutting their rates to try to drive business. So when volume slows down and lenders' volume goes down, mortgage companies have a lot of overhead and they start cutting their rates to try and bring in deals even at a lower percentage of profit, just so they can cover their fixed expenses. And so as the mortgage companies in the industry start bringing their rates down, it starts getting really competitive, and you have mortgage companies out there offering super low rates. And then what happens is if your rates aren't as low, then you are at a major disadvantage. And in today's world, with the internet and all the information that's available to people right on their phone, it's super easy for the average consumer to get online and check rates and see if what you're offering is in the ballpark of where they want to be. And so for me, I've gone through a few of these cycles where I've been at an independent mortgage banker, and the independent mortgage banking companies tend to have higher rates than depository banks or mortgage brokers. And when the market is really good and there isn't margin compression and mortgage companies are offering similar rates across the board, then it's not as big of a deal if your rates are a little bit higher. And I've always justified that with thinking to myself, well, I have better service and I provide a better experience for my clients. And so I've always justified having a little bit higher rates because of that. But when we go through a cycle of margin compression, that small amount that the rates are higher ends up becoming a huge amount that our rates are higher. And it really impacted my business this year. And I finally decided, this is the last time I'm going to go through this cycle with rates that are way out of the market. And so I decided to open a mortgage brokerage, Tiger Home Loans. And so I want to take you through today five reasons as to why you should consider becoming a mortgage broker if you're not already. And really the five reasons why I think brokers have the biggest advantage going forward in the market. So the first is lower rates, like I was just alluding to. And so mortgage brokers, their interest rates are substantially lower than mortgage bankers, and they're lower than a lot of depository banks as well. So mortgage brokers have access to the lowest rates in the industry. And for me, I opened Tiger Home Loans 3 months ago. My business has already increased, and I'm getting deals that I otherwise never would have had a prayer of getting. And clients who have rate shopped me have found that the rates I'm offering are the best of any mortgage company that they talk to. And so they ended up going with me. So I've got extra deals in my pipeline already that I wouldn't have had, because when those clients shopped my rates, I would have lost those deals at prior companies that I was at. And so that has been a huge advantage, to have lower rates and capture a higher percentage of the deals on the leads that I'm bringing in. Why do mortgage brokers have lower rates? And that was something that was always puzzling to me for a long time. It's like, I don't understand how a mortgage broker can offer such a lower rate than an independent mortgage banker. And it's a complicated answer. There's more than one component that goes into this. So the first is that mortgage brokers operate in a wholesale environment, and you've got a whole bunch of wholesale lenders competing to get the business of the mortgage brokers. So for me as a mortgage broker, when I'm taking an application, I can send that client to whatever lender I want to send them to. So if I'm sending my clients to lender A because lender A has great service and great rates, and now lender A, their rates start to become worse, then at any point I can start taking my clients and send them to lender B or lender C or lender D. And so it creates this level of competition in the wholesale space because mortgage brokers are not tied to one company. And when I've been at different independent mortgage banking companies, I only have one rate sheet that is set by the secondary department of that company. And so if the owner of that company wants to increase rates, there's nothing I can do about it. I can't send my clients anywhere else when I'm an independent mortgage banker. So that competition helps to keep rates low because wholesale lenders need to offer good rates to get the business of mortgage brokers. The next is just efficiency. So United Wholesale has been the lender that I've sent most of my clients to so far because their efficiency is unbelievable. Their underwriting turn times are not measured in days, it's measured in hours. You get phone calls from their underwriters, you get phone calls from the account executives. They've got every product under the sun, and the closing process is really good as well. So they get docs out in a matter of hours as well. So not only do they have great rates, but their efficiency is off the charts. And so like if we take a lender like United Wholesale Mortgage, they don't have a retail arm of their company. All they do is process, underwrite, and close wholesale transactions. And so that makes them very, very efficient at what they do because they're not managing multiple departments, an underwriting department, a sales department, a centralized call center, back-end compliance, all these different things that a traditional retail independent mortgage banking company would have. They're very focused on just fulfilling the applications that are sent in by mortgage brokers. And that creates a lot of efficiency, which keeps costs down. And then the independent mortgage bankers, some of them that I've been at, have become very bloated during the times where business is good. And when I say bloated, I mean offering a lot of ancillary things to loan officers and to their employees that cost money, that are easy to pay for when volume is high. When volume goes down, those items become very difficult to pay for. And the only way to pay for it is to keep the rates high so that they're making more money per transaction. So, these independent mortgage bankers spending money on sponsoring sports teams, spending money on having loan officers with way too much staff, tons of office leases, like buckets within the mortgage space. So some lenders, they're going to be aggressive on a 10% down, 740 FICO primary residence transaction with two borrowers. You're going to get really good pricing in that specific scenario. Or some lenders might be really good with FHA, at a 640 credit score and 3.5% down, or whatever their different bandwidths are that they want to be in the mortgage space. So you'll see that some lenders in certain scenarios have better pricing than others. And so as a mortgage broker, with that flexibility on who you're sending your client to, you can take advantage of lenders when they like certain types of transactions. You can take advantage of the pricing that they offer. And then invariably, lenders at different times will run pricing specials. So, depending on the season, depending on what's happening with their business, wholesale lenders will run a special on pricing for purchase transactions or refis or whatever it is. And so when you're a mortgage broker, you can send your clients to different lenders when they're running specials to take advantage of those rates when they're there, which you cannot do as a independent mortgage banker. So that's some of the reasons that wholesale lenders and mortgage brokers are able to offer lower rates than what an independent mortgage banking company can offer. The next component of it as to why you should consider being a mortgage broker is higher compensation. So my company right now, we're set up at 225 basis points on all the lenders that we send loans to. And so you're making 225 gross as the margin coming in. Whereas if you're working at a independent mortgage banker, you're making somewhere between 100 to 150 basis points in compensation. And so you've got a lot more comp coming in with lower rates. So it's a twofer. Not only are the rates better, but you're making more per transaction. Now, my company, we take a 50 basis point split when you're funding 1 to 5 loans in a month. And if you fund over 5 loans, we take a 25 basis point split. But a large percentage of that funds a recruiting incentive plan that I have in place that I'll talk about in a minute here. So higher compensation. And then I offer some support at our mortgage brokerage. So I do one-on-one coaching for LOs who want to grow their business. We have a great CRM system, Google Workspace for all of our email and document storage and like video calls, all of that. Google Workspace works super well. I like it way better than Microsoft Office. And then we've got a phenomenal CRM system called Shape. Shape is our online application. But Shape also does a ton of marketing and client management for you that's all automated. So when you put a client into Shape, it's already putting them into different campaigns and follow-up campaigns of text messaging and emailing and reminding you of what to do. That's all pre-programmed and built out for mortgage lenders. The online application system has a great portal where clients can upload their documents into the portal, and then you approve or reject the documents if they look good or don't look good. And then you can update the list of items that are needed and hit send, and it will send out an email automatically reminding the client to upload those documents. So a lot of really cool stuff in Shape. Any realtor that you enter into Shape, it will create a co-branded landing page where that realtor can send their clients to submit applications online. And then every client who submits an application online through that link, the realtor is able to sign into Shape and see a status report of all of the leads that they've sent you and all of the applications that have come in. So a lot of really awesome automated things within Shape. It's got a built-in phone, voice over IP phone system where you can call right out of the CRM. You can text out of the CRM, and that works really well. As well. So I've got a team line phone number and then my cell phone that I do business with, but both are super easy to use. And I use the team line through the Shape app on my phone. And then I offer ancillary support like that within the mortgage brokerage. So coaching, all of those technology components, and then a recruiting incentive plan where you can earn a percentage of the commissions on any loan officers that you bring into the organization. So that goes all the way 4 levels down, which allows the loan officers in my company to earn some additional residual income. We offer all these things as at the company level. I pay for credit reports, and then I pay for the CRM and the LOS system as long as you're funding one loan a month. So those things are covered for you in the split that is being paid to Tiger Home Loans. But then I'm not providing anything else aside from that. And here's why. I want loan officers to be able to customize their business for how they want to run it. So, a lot of the independent mortgage banking companies say, oh, well, we offer so much support. We offer this and that and all these different things. And that's great if you want all of those things. If you don't want all of those things, then you're paying for it by higher rates or lower comp or both. And they have to, if they're offering it at the company level, then they're offering it to everyone, but that might not be what everybody wants. So I want the LOs in our organization to earn the max commission that they can, have a baseline set of support items that are in place at the company level that are critical to just run your daily business. But then everything else you're going to earn as the commission, and then you can make the decisions on what you want to invest in for your business rather than me making those decisions for you. So it gives you a lot more flexibility in how you run your business. And then as a mortgage broker, you're self-employed. So there are additional tax benefits to being self-employed versus being at an independent mortgage banking company or a depository bank where you are a W-2 employee. Faster paydays. So we do weekly paydays at Tiger Home Loans, and you can get paid much quicker on your commissions instead of having to wait 2-3 weeks to get paid commission on a deal that closes. And then because we have better rates, we're not taking any pricing concessions, or I shouldn't say any, but we're not often having to take pricing concessions because the rates are really good. So because we're not having to take a lot of pricing concessions, you truly are earning that full comp. The company is earning the full comp, which means that the company can continue to provide these things. Whereas I've been on a P&L model at independent mortgage banking companies before, and I found that I was having to take so much in pricing concessions because our rates weren't very good, that the profit coming in on the P&L really wasn't all that high because of the pricing concessions. Yeah, I was set, at a 300 margin, but the margin that I was actually earning was substantially lower because I was having to take a lot of pricing concessions to be able to compete for deals. So not only do you get lower rates, you get much higher comp, which is awesome. And then you have more flexibility to get loans done as a mortgage broker. And so here's what I mean by that. Let's say, like, for example, I have a client who has been working for the same company for 10 years, and she's been an employee of the company, but they just switched her to 1099 a few months ago because she moved from another state here to Arizona. And so I took that deal to seven of the lenders that we work with to see if they would allow us to use that 1099 income, given her work history and given the employment contract that they gave her to be 1099. 6 of the lenders said no. One of the lenders, their underwriting manager, said, yes, I think we can piece this together to make it work. And so now I have a pre-approval that I sent out to a borrower that I otherwise would not have been able to do, because unless I just got lucky that the company I was working for said, yes, they would do that deal, because otherwise I wouldn't have any other options to shop it out. So there's a lot of flexibility in different scenarios and getting approvals on different scenarios, because not every underwriter and underwriting manager is going to look at every application in the same way. And so being a mortgage broker and having the opportunity to shop that application around gives you more flexibility to put deals together. It also just gives you more flexibility in terms of the products that you can offer, because you can shop around to any lender out there and find all kinds of niche products that you can't get as a independent mortgage banker, because you're set with the products that that company has chosen. And then we've got, because the rates are lower, more flexibility as a broker also means that you can do deals from different types of buckets. My business has always been referrals from real estate agents, other business people in the community here, personal friends of mine, and past clients. But as a mortgage broker, because I have access to really good rates, I could now buy leads online if I wanted to, and I would have an opportunity to close some deals from leads that I generate online. Because as a mortgage broker, when you've got really competitive rates, that's the most important thing with an online lead. It's really going to come down to rate. Whereas a referred lead from a realtor or someone who you already know, there's implied trust there. And so generally those clients aren't shopping you as much. And so the rate isn't as important. But if you're buying leads online, that generally those people are talking to 2 or 3 lenders at one time. And a lot of those decisions for those buyers come down to rate. So having good rates gives you the opportunity to generate some leads online as well. And that can be a great way to supplement your income when you've got competitive rates to offer. So a lot more flexibility with being able to shop scenarios around to different lenders, being able to get business from additional buckets where you can grow your business, and having the opportunity to sign up with any lender that you want, which gives you the ability to get a really diverse suite of products that you can offer to your clients. Better technology. So I talked a little bit about this earlier. We've got Google Workspace for our email and document storage and messaging and video calls and all of that. And that Google suite works so well. I've been on Microsoft Office for my entire career. Switching to Google is just so much easier to use. And I use Gmail for my personal. So now I can just toggle back and forth between my personal and my work email. All the Google apps on my phone work super well. So that's really slick. And then because our LOS system is browser based, I'm able to access the LOS from my phone. I can access it from any computer. Whereas other companies I've been at, the LOS system we used was Encompass, and Encompass is a program that has to run on a computer. Whereas now at Tiger Home Loans, we use Lending Pad that just runs in a browser. So you can use it on any computer that you can sign in on, which is amazing. And then that's allowed me to buy an Apple computer to use as my work computer. I have an iPhone. And so now my text messaging is available on my phone. So I do a lot of texting with clients. Well, now I can do all that texting on my computer, and I can type text messages on my keyboard, which makes it like 10 times faster to text and just makes it more efficient. And because my phone and my computer are running the same software, it's all linked together. It all works together. I don't have to mess around with it. So the technology is so much better as a mortgage broker because I can set it all up to work together. Whereas at an independent mortgage banking company, you're stuck with what they've created and what they've set up, and it doesn't always all work together, and you're dealing with an IT department. So it's been awesome to have that everything from a technology perspective working together. That Shape CRM system that I mentioned is absolutely phenomenal. Works really well. I have been on Jungo through Salesforce for 7 years, and that's also a good CRM, but it's just super dated. And all of their email marketing campaigns, it's like they created those things in the early 2000s and haven't touched them since. And with Shape, all of that stuff is really up to date and looks really great, works really well. So the technology is super good as a mortgage broker. And then we work with a third-party processing company called Willow Processing. I want to give a shout out to Willow because I've closed a handful of transactions with them now, and they do an absolutely phenomenal job. They prepare our LSUs for us weekly. They have their own portal that gives us a status view of all of the loans that we have in process, where they're at with processing and closing them. And really submitting a file to them is super easy. So I upload the docs into their portal, type up a cover letter, and in it goes. And then they've got it all the way from contract to close. The only thing I have to do is have a rate lock call with the client and get their interest rate locked in. And then Willow is handling everything else. So having them is like having a full-time LOA processing all of your files. And that makes it super efficient and doesn't take much of my time. It's very easy to submit a file to them, and then they're taking that thing from start to finish. And what's great about working with the third-party processing companies is they are only paid per file. So that fee that's paid per file is a borrower paid fee, not a loan officer paid fee. And that incentivizes them to close loans and close them really quickly because they get paid when the loan closes, just like I do. And so we're on the same page in terms of how our compensation is structured, which is really nice. And so we've got that processing fee that's charged to the borrower, but there's no lender fees as a mortgage broker, which is another huge benefit that falls in the pricing bucket. We don't charge a lender fee. So other mortgage bankers that I've been at, we've had a lender fee anywhere from $1,000 to $1,500. And now I have zero lender fees. So the only time there's a fee in the lender fee column is if we're paying discount points to buy down the rate. So the processing fee to Willow is less than what I've been charging as a lender fee at other mortgage companies by a pretty substantial amount. So being able to tell clients that we have no lender fee is huge as well. So that's just some of the reasons why I think if you're not a mortgage broker right now, you should really look into it. My business has grown over the last 90 days when most people's business is still continuing to slow down. And I think some of that has to do with rates coming down a little bit. But I also think that it really has to do with me becoming a mortgage broker. Not only am I now capturing a higher percentage of the leads that I'm getting referred over, but the agents that I'm working with, the feedback from them has been absolutely phenomenal from making that move to a mortgage broker. Like, I can't tell you how many of the agents I work with who have said, "Wow, that's awesome. I was wondering when you were going to do that." Or, "Yeah, I figured you would do that at some point." Or, "I'm so glad to hear that. Now I can refer all of my clients to you." And so I'm getting more referrals from realtors because they know that I have good rates and that when they refer a client to me, the client's going to be really excited about what I'm offering them. So I'd love to talk to you about my journey becoming a mortgage broker and how it's gone for me. I can't say enough good things about it. I'm so excited about being in this space. Seeing my business grow already is reinforcing the decision. And I'd be happy to help you navigate those waters, whether it's coming to Tiger Home Loans or starting your own brokerage. I've gone through that process and I've got information that I could share with you to help you in your journey as well. So shoot me a DM. Hope you're doing well. Talk to you guys later.